Hi guys, Shami here with another video on the NZDayTrading101 channel. So today I'm just going to talk to you about how to know when the trend is over. So this is a quite important one because you want to be in a stock when that stock is trending. So basically, as you can see here, this was CBD last year. So you want to kind of know like, okay, so the trend is starting to form upwards, and these are daily candles, by the way. Put that to the side. And it kind of just allows us to see, okay, the trend is going, it's going higher and higher and higher and higher. So how do you know when this trend stops? So there's a certain sort of way that we can see this, and it's very important as well because you want to be able to get out of a stock at the right time. So you don't really want to be going into a stock too late. You don't want to be stuck in this. If you have gone to a stock quite early, you don't want it to kind of go up then go straight back down, and then you basically where you got in, you got out again. And what was the point of that, right? So um, yeah, so I'm going to show you guys what's a good way to see when the trend is over. So a good way to see that is what we call the first red days. So the first red day is basically when a stock is going higher, and what we want to look for is a stock that doesn't close higher than it opened. So we want a stock that closes, that opens about here and that closes on the day, it just goes down about like that and closes here. So basically, it opened here and it closed here. And that means that usually the trend is over. So it's a good way for me. So when I see a trend like that, I usually tend to get out. I know it's gonna, the volume's starting to diminish, and then I'll start to unload my stocks and start to get out. And you normally see it surge up again a little bit, or try, and it'll slowly just make its way back down. So um, yeah. So that's how I see. Another thing, so I was just explaining the first red day on the chart. So this is stock CBD. So you guys probably all saw this last year. It was a stock that was it was the marijuana stock. So there's a lot of hype around marijuana stock, a lot of news in the media, and that was causing the stock just to surge upwards. So the gain that we got a huge gain in that one. I think anyone who invested about 40 cents, it went up to nearly up here. So probably you could have made about 90% return on that. Now it's a good volume behind it as well. So whenever a stock has really good volume on it, you can trade a lot more size. And that's what you want to do. You want to be trading this, but more quality setups. You want to make sure there's good volume flowing through the stocks. You don't want to be trading anything too thin, otherwise it's quite hard to get out and quite hard to get in as well. So yeah, so here we go. So I'll just explain this one. So stock was going up and up and up and up and up. It was ramping upwards, and then you just saw it was getting overextended here, and we're just kind of waiting for it to pull back. But as you saw on this day, so with the candlestick, obviously it opened here and it closed here. So as you know, the trend was kind of continuing higher, but the next day it just started to ramp up a bit higher. So it went up to about 84 cents in a whole day. So it opened here. The highest point it went up to was here, and then went down the whole day, and then just kind of fell back all the way down to about 55 cents. So it had a huge drop. Um, so this is unhealthy price action. So with this type of price action, you can take advantage of it. So for us day traders, we love volatility. We want stocks to be jumping up and down. Like we want it to have like pretty big moves to the upside or big moves to the downside because we can take advantage of this. So this was a great stock to trade. Anyone that traded it last year, there would have been lots of buyers on the buyer side. The trend was up. Everything was looking quite nice, and the volume was increasing as well. So as you can see here, um, yeah. So I'll just show you another stock that's I'll just show you a couple of examples of two other stocks that had their first red days, and you kind of know that the trend was over. So this kind of signals that the trend is over short term. So basically, it can still ramp up higher. So if it does kind of correct back down, it could still kind of keep going higher as you saw. So and then eventually, this one formed a sort of a flat top breakout. Let's see if it ever. No, it actually didn't. So this was actually going for a flat top breakout at one stage. So but it looks like it never had it, so that just means it was kind of gone till, till next time it had news out and kind of just downtrended. So yeah, so I'm going to show you a couple other stocks that had their first red days, and you can kind of see that the trend is over in the short term. So so you would have seen recently Air New Zealand. So Air New Zealand had the first red day. So here we go. So it was pumping up, it was pumping up, it was pumping up. And as you see here, it's kind of just reached the top here at about 160-ish and then just fell straight back down. And you kind of knew that the trend was over. So there you go. And then it did go up the next day again, but you know when the trend is over there, it's not going to continue higher, because you see how there's a new high here, a new high here, a new high here. So you want the stock to kind of keep forming new highs. And it didn't happen here. So this one kind of did form a new high, but it closed lower. So when a candle, here, I'll just take away the drawings. So when a candle goes red like this, for it to form another new high up here, let's say this was a candle, for it to form another sort of high up here, the probability of that happening is very low. What's going to happen is going to form a lower high. As you can see it here, there's a so when it formed a new high here, but since it closed lower on the day, and a huge wick as well. So these sort of wicks here kind of signal that that every time it goes up, it's kind of just being sold back down. So lower high, lower high, lower high, and as you can see, the stock's just kind of going down in New Zealand. So probably not a good time to trade it. But obviously, it could start picking up again. Just have to keep an eye on it. So yeah. Go. And another one was ABA recently as well. That one had its first red day. So in the US, this is actually a strategy that US people use, US day traders, to actually short stocks. So if you guys know Timothy Sykes, he talks about shorting the first red days all the time. So in the US, what they do is whenever there's a first red day, and they'll see that, and next day when it opens, and they'll start to short up here, and then it'll start to dip lower. So it'll start to kind of form a candle here and start to just go lower and lower and lower. So it's the same thing that's happening here, but this is not always the case. So this this is what I've noticed that happens in the market quite a bit. So it's kind of like a high probability that the stock's not going to continue to trend higher. So yeah, and I thought I'd just give that to you guys just to make sure that you guys aren't sort of getting in on the first red day, because if you're getting in on the first red day, more likely the stock is probably going to go lower. So yeah. Alrighty guys, so that sums up how to know when sort of the trend is over, and just to watch out for those first red days, and just to keep a lookout for it whenever you're kind of in a stock that's trending higher. So thank you for watching the video today, and please like and subscribe to the channel. So smash that like button, subscribe to the channel, helps me keep going, builds momentum for me to keep bringing out these videos for you guys, and I'll see you guys on the next video.